Mr. Pradyuman Kanodia, Group CFO of Phoenix Mills, joins us right now in our studios to talk about that. So, Mr. Kanodia, great to have you. Thanks so much for joining in. So put this into perspective for us. The quarter that went by, it's been stable. I mean, 12 to 13%, maybe in line of what you had spoken about the last time we met. What happens now, maybe in Q4 or the year ahead, wherein a lot of people are believing that because we have the new property at Kurla also open and that run rate would start kicking in, so maybe the overall run rate would pick up. Would that happen?
I think when we look at the standalone results, these numbers don't count for Kurla or Pune developments that we are currently on. So we have different shareholding into these different companies, and when we consolidate the numbers, clearly there would be an upside there. But when we talk about Phoenix Kurla as a property, you would see that the rentals have crossed 50 crores for the first time in the quarter. We have touched that number, and that's very exciting because clearly we see a correlation between the spend at the Kurla property and the rentals that we derive. So when we see a spend of almost 100 crores in a month, that was a December month, which was almost 100 crores, and the correlation from that to the rental income clearly gets established. So the revenue share that we had planned for, the incremental rents that come on from there, is something which we really would look forward to in the coming quarters as well. But clearly when you see the other properties starting contributing towards my top line by way of consolidation, Pune, which is at 65-70% operational right now, would definitely put in the numbers in the right way that you want to look at it. Kurla, maybe with 24% of our shareholding there, would not get consolidated, but early days for that property, we opened up only in November, so it will take a while before it stabilizes.
Okay, so leaving aside Kurla, because that would probably won't even form the part of the consolidated numbers, when do full benefits essentially start kicking in into your books? Would it be post Q4 of the current fiscal, and if so, would Q4 be pretty much the kind of stable quarter that we've had in Q3? I mean, I see no complaints in Q3. It's pretty much stable for you per se, in line with what you had estimated. Would Q4 be like that as well?
Yeah, if you see this year, the numbers have been consistently stable. Of course, the third quarter has been quite exciting for us. The growth in the fourth quarter would be in line with the third quarter numbers. We've seen rentals of almost 176 rupees per square foot. That's the average rent that we derive from High Street Phoenix in the current quarter. This number is likely to stay at that particular range. What we see is that the correlation between the consumption by the retailers and the correlation to that to our rent is very clear now. The growth of 7% that we saw from quarter on quarter has been reflected in the average rent for the quarter, which was around 167 rupees in the previous quarter, increasing to 176. The fact whether the other properties are getting consolidated in our accounts or not is more of an accounting issue. But when we talk about individual properties, Bangalore, which opened up in October, is already around 49-50% occupied and generating very good interest from the retailers as well as from the consumer at large. Pune property has ramped up very, very efficiently. We are almost 65% occupied, and hopefully by March this number would be close to 75-80% when the multiplex opens up there. Kurla will take another 6 months before it reaches that 65-70% stabilized operational level. So each property would require 6-8 months time to stabilize, and then they would be, I would say, on a self-generation mode where the cash flow would be significantly large. Over a period of 4 years, if you look at it, when these assets have matured and really started contributing significantly, we could have a top line in excess of $150 million coming in from the rental side of it, just on the maths of the sum of the total of the rental income.
Okay, so it's $150 million is what we're expecting for just the rent in some time to come.
Yeah.
But right now, of course, you've given us a sense of how the rentals are panning out for, High Street as well. Any revisions that you're planning at this point in time, and, what's the quantum of revision, and by when can we expect that to kick in?
Well, the contracts have their own periods, and there will be a revision depending on when the contracts expire. This year we've been able to renegotiate a large bunch of that. 150,000 square foot of area came up for renegotiation, which has in fact helped us in increasing our rentals from early 150 to almost 176 now. Every year there will be a few pockets of such renegotiations that happen, but the current fiscal year will not see much of that happening because the last bit that we saw in 150,000 was a big amount, and this year around 50,000 square foot is expected. But more importantly, the revenue share component that starts kicking in and that giving us the incremental revenue is what is exciting and what keeps us motivated.
So just a couple of updates. One is purely from the fact that I also work in Lower Parel area, and it's great fun going to Phoenix. When does the Shangri-La start full operations? One. And two, Is there is that 12 to 15% kind of a figure a benchmark for Q4, and would that be the YOY growth for you in FY12 or FY11 as well?
Well, I think rental income being more of a stable character, you really can't expect too much of jumps coming quarter on quarter. But the more and more models we shift to revenue share in terms of currently high street, we are at almost 60% of our stores are on revenue share model. And when we put this number to 75-80% as we come into that stage, you would find that the growth will be more visible rather than this 10 to 12% that we spoke about. But that may take a little more time before it starts reflecting on that. On the Shangri-La front, I think we start handing over the property for the Shangri-La management to take over in the months of March and April. We have seen a lot of activity and work going on behind the scene, but clearly the next 2 or 3 months are very important for us, and that's the time when we start handing over, and hopefully it would be ready for launch thereafter.
So FY12 or FY11, 15%, top line, bottom line?
Well, we can look for that at least, minimum.
At least, okay, great. So it can go up to 20 as well.
Well, depends.